ocean sipping down. My throat and landed on my hopes I'm dreaming. Off the mats, no hidden grids, I'm fleeing. And I worship you like holy days. Lying on my back, seeing clouds and rays. Drinking lemon bitter from this lemonade. White horses, merry time won't do.
What's up, guys? Welcome on board. Just give me a sound check and we'll get it started. Background sound check and microphone sound check. Last week I did a stream and I think the gain was way too high. I was going to delete the stream, honestly, like for 25 minutes. It was, I'm pretty sure, pretty unbearable for some people. But I left it up. Sound is good? Cool. So we'll get started in a minute. Hopefully everyone's doing well. I want to say either hopefully everyone is really zoomed out or hopefully everyone is really zoomed in. Beyond the intraday, I mean, it's market's just it's all over the place, right? This is a news-driven market for you, though. So sound is good, cool. Background noise isn't overwhelming. Make sure that this is gain turn up a little bit. Both good, cool. All right, so yeah, we'll get started in a second. A few people in here. Way better than the last time. Good to hear. Good to hear. How's everybody doing? Texas. Nice. Yeah, it's a rainy day in New York. All right, cool. So thanks for tuning in, guys. Looks like we have an adequate amount of people now to get it started. Not that I wouldn't get it started if there was only like 10 of you. So thanks for tuning in, as always. If you're not a subscriber, you'll see that you can participate in the chat. So if you want to talk in the chat, ask questions, participate, make sure that you go ahead and subscribe to the YouTube channel. I'm one of the co-founders of Blockroots. My partner is Josh Rager on Twitter. And he is a really well-known NFT and DeFi trader. I'm primarily, I have a background trading equities, equity index futures, crude oil, and now crypto primarily, but my bread and butter for the longest time has been trading BTC. Doesn't mean that I don't trade alts, it's just my focus has been primarily on trading Bitcoin intraday and capturing the meteor swings when they are when they present themselves, right? So go ahead and hit the like button, do all that stuff. We'll get it started. I'll go through the formalities. Make sure that everyone is reminded that, as it says below, none of this is financial advice, right? This is strictly for entertainment purposes only. I'm just here to entertain you. I brought some balloons. I'm going to paint some faces, you know, standard fare for a children's party. Not to call anyone children, even though there's plenty of childlike behavior on crypto Twitter. But I had a one-year-old's birthday party that I'd just gone to, and it was riveting, as you can imagine. I guess they're fun when you drink, but I do not drink, so you know how that works. A one-year-old's birthday party, you're just kind of staring at your watch. My sweet spot is like 2 hours at events. Anything beyond that, it's almost like all hope is lost, right? At least a 2 hour event, 2 hour commitment, you look at your watch, you're like, all right, I'm an hour in, I just got an hour left. But anything beyond that just is, I don't know, too painful for me. Anyway, so none of this is financial advice. This is strictly for entertainment purposes only. I mean, I try to be as brutally honest as possible, hopefully not too abrasive, when I say that you can and will likely lose all your money. And for some people, that means multiple times. Now, some people continue to get back on the horse, saddle up. No pun intended. Me being an equestrian guy. Yes, Cantering Clark is my Twitter name. It's actually one of my wife and I's horses is Clark, so that's where that comes from. But yeah, you can and will likely lose all your money. If this is your dream, though, right, go after your dream. Just understand that going after the dream of being a trader, while it does have a similar attrition rate as any other very difficult but worthwhile pursuit, right, there's plenty of benefits to being able to be a trader, trade for yourself, and ideally, if you're well capitalized enough, there's a level of autonomy that comes with being a trader. But it's different than pursuing some other kind of goal. Like, let's say you want to be a violinist or a baseball player, or you name it, right? The best oil painter. Those pursuits, right, involve a certain amount of capital that you have to put up. I remember I played all sports as a kid, and if you were a lacrosse player, you had to buy all the pads. Feel bad for hockey player parents, because that meant their kids had to travel and they had to put up all the money for the that equipment. But that's it. Like, if you sucked, it was, at the end of the day, it was a time commitment. You learned something, but you didn't lose money, right? Now, you could lose money pursuing, you can lose money pursuing other things besides trading, obviously, but it's a bit different, right? Like, at this stage in my life, I wanted to try out for the U.S. Open. I was a pretty good golfer. I actually got good later on in life. It took me 2 years to start shooting single-digit handicap. So under par, around par, and that was because I'm an absolutely obsessive person, and I actually burned myself out. So I burned myself out. I was playing like twice a day, practicing from the beginning of the day to the end of the day, chipping around my backyard, you name it. Obsessive, which really helps for trading, but I burnt myself out. Now, if I want to pursue golf now, it's costly. Go to Q schools, try for U.S. Open, all these things. It costs money, but again, not losing money by consistently trying to better myself in the sport. Whereas in trading, you could tell someone like demo trade, trade with a small amount of capital, but it's really easy and really tempting to ante up, right? When you're first starting, when you're finding your way in markets, it's really easy to just ante up and let discipline sort of go out the window, and wipe out because of that. And then another thing is, when you're trading, if you're losing money, if you're on like a losing streak, it's really easy to just say fuck it and almost write off the amount of capital like you have, like it's already sort of a sunk cost and it's already gone, and be really, I guess, fatalistic in markets and ultimately blow yourself up. So it's not the same as other pursuits that have really high attrition rates. Though, again, I can't say that it's not worthwhile because it's what I do. All right, so let me say hi to everybody and then we'll get into it. We're going to keep the stream really simple. Primarily focus on what's taking place recently. Any questions you guys have, I would love to answer them. Want to take this stream wherever you want to go. I don't want to look at a bunch of alts because alts are dog shit right now, so just keeping it real. There's obviously a lot taking place on the macro front. It's a very news-driven market right now. Russia, Ukraine, interest rates, whether the whole Russia-Ukraine crisis is just a distraction from the fact that the Fed is going to be tightening, unwinding its balance sheet, raising rates. Plenty of conversation back and forth. Is it priced in? Is it not priced in? Well, if you look at the 2-year, if we look at the 10-year, they jacked it up and jawboned it, and lifted up the front end hard enough to say that, yeah, rate hikes to a degree are obviously priced in, but there's a whole lot else that, that they're talking about, that they're planning on doing. It's one thing for them to say that they plan on doing it. It's another thing for them to actually do it. So we'll see what happens in the coming months. But March is around the corner, and that is the date that we should have the first rate hike. So whether that's 25 basis points, 50 basis points. I don't want to get into all this, but the point is that there's so much taking place. Markets are really sensitive. Some larger liquidity providers have stepped out of the market and are, as I've said multiple times, sort of just Fed watching. So, waiting for the Fed to make a move, right? To be a little bit more clear for, maybe one of the hikes to be behind us. So when you have these larger liquidity providers step out of the market, it takes away from what ultimately would normally dampen volatility overall. And a news flow driven environment, I'm sure you could tell, is it's a tumultuous, very volatile one. So it's been a tough trading environment for myself, for a lot of other professional traders. I have a lot of friends that trade independently, still trade prop, and they're basically having the same experience. So anyone who's like on Twitter saying like, "Oh, dude, like this is, I'm killing it," it's like you're LARPing, dude. Like everybody I know is having a tough time. No one wants to say the phrase, that three word phrase. I don't know, and that's I said it yesterday. I'm like, listen, I don't know. I have a feeling that I'm good at knowing where price is going to be a couple minutes from now. I have a pretty solid feeling that in the long run, over a 5-year time horizon, that Bitcoin, the majors are all higher. But from a week to week basis, talking about like the intermediate term trend, I don't know, right? I'm just trying to play the first sticky area in front, right? Dealing with like, if you've ever seen the movie, Al Pacino, great speech, Any Given Sunday, the 6 inches in front of your face. Really just dealing with what's ahead, right? Immediately. And not extrapolating and not thinking that, a scalp is going to turn into a swing and what if I buy the bottom? None of that. If there is any trend right now, it's a trend of volatility, right? It doesn't have to be just a trend in price moving upward or downward. It's a pattern trend, right? The pattern is price goes, maybe 1-2 ATR in one direction, looks promising, and then reverses, and then looks like it's about to, make new lows, looks promising at new lows, and then reverses, and this is just sort of the status quo. So until it changes, nothing changes, right? Which is a pretty tautological statement, but it's true. So let me say hi to everybody, and then we'll talk about what we're looking at right now, which is a TPO chart. All right, Cornholio, what's up, buddy? Oni, Bears, Liam, what's up? Sven, Abraham, TT, Roman, Matata, what's up from Kenya? What's up? Carlos, Shamel, F10 free skier, what's up? HS, AZ Horseman, nice. I always want to go to AZ to play some golf. They look like some beautiful courses in Scottsdale. Losing all your money is your dream. Hey, well, throw your hat over the fence. Go after it. Anything over 2 hours? Yes, exactly. Can you go over trading resources, strategies? Yeah, I mean, I share a book list. There's a ton of free resources. You don't really need to pay anything. Myself and my partner, we created a course on profile and order flow, but I don't even advertise that. I mean, I did it a long time ago, so we charge like pennies for it. It's like $49 to take an order flow and market profile course, but you could honestly just gather all of this stuff for free on the internet. We're very close to probably not even charging for it. Lambert, what's up? Okay, cool. Digital Gnome, Slatter Down. Ross, what's up, bud? Flying Kicks, Knight, Oleg. Okay, Max, cool. So just to take the temperature, how are we feeling? We bullish, we bearish? Do we think that we are shadow banned? I don't think you're shadow banned, Flyheel. I see your comment. Let's see. What was I gonna say? Trader SE. I've known Trader SE for a long time now. What do I think of his trading style? I mean, he's a phenomenal range trader. I think he gets like the rap of being a bear, like a perma bear, but I think he just gets off on pissing people off. Seems like a great guy, great range trader, ton of experience. So what's there not to like about that? But everyone trades differently, right? So do we feel like we're near a bottom? Are we closer to the bottom or closer still to the beginning of this trend? Because that might seem like a no-brainer to some, because we're 50-60% off the highs. How can we not be closer to the bottom? But it's not like being in markets we are completely unexposed to any kind of tail risk or major tail-like event. We saw March 2020. that kind of came out of nowhere. There's arguments for the market being in better position to do that sometimes over others, depending on how much leverage is in the market. But I think it would be unreasonable to say that any prices are really outside of the realm of possibilities, right? Improbable, maybe, but impossible, no. I think we could definitely agree that like anyone who's calling for 10K right now, it just kind of doesn't make sense. Like, will they be looking for clout if we get to 10K? Absolutely. But will it make sense to have made that call? No, because there's plenty of levels in between there. If someone just held down, like if someone just opened a short right now and held it down to 10K, it would kind of imply that they didn't have, think about how a market would get there. It would imply they didn't have like that much risk management or plan, because that would mean that they held through multiple levels that would shake out even the most, high resolve bears. Short at the moment, so probably bullish. Yeah, I'm actually short right here. So I'm short for a quick short to what I think is ultimately a return back to. I'm short off the highs right over 38. The highs of right around today. For what I think ultimately takes us to right around 37.5. And then back down to the lows around 37. Closer to the bottom. Yeah, so I honestly do. I think we're closer to the bottom. I mean, sentiment is there. I mean, it's the kind of sentiment you would want, but it's not like it is isolated to just crypto. We are being pushed around by legacy markets. So it's tough to say, because like if the S&P were to take a dive off the cliff and drop down to like, let's just say 4K or 35, which would be extreme. Well, 4K, 35, whatever. Point is, like a significant drop. Like Bitcoin doesn't have it in itself to, not to personify it, but I think you understand, to hold its ground. I don't see why. It trades more like a risk asset. It trades more like a tech stock. High beta to the indices. It trades more like leveraged ETF of the S&P. So I think it all is, it relies on or hinges on what legacy markets do. So Oxdon deleted. Oh, we'll talk about that in a second. That's interesting. I don't really like to talk about drama, but that's really funny. It all hinges on what we see in legacy. Like, are legacy markets really pricing in the extent of QT and maybe all of the plans that the Fed has in the near term? Does any kind of global conflict, does it shake up maybe the outlook for what their intentions are to begin with, or what the narrative has been so far? Maybe we're talking about rather 7 rate hikes, probably priced in a fair amount of March's rate hikes, depending on what we get. Definitely have seen it in the Fed job owning, right? To an extent, in just looking at Treasury so far. But maybe this piss poor sentiment, see, it's tough to say because sentiment's really pissy, but the markets do look like shit right now. And again, we're not in a good spot. But if the S&P finds its footing, I don't see why Bitcoin would continue down. If the S&P loses its footing, I don't see why Bitcoin would maintain its footing. So there are a few things, obviously, from a sentiment standpoint, yeah, sentiment's in the gutter. From a positioning standpoint, yeah, we've had, periods of prolonged negative funding, but the last time we did have a period of prolonged negative funding, we did move up, right? We moved up already to 45. We got that move and we rolled over since. So it's not like as precise as a tool on its own to really lean on, unless you're saying, okay, I'm really going to widen my area for what I perceive as a reasonable area for price to accumulate within during periods where you have on and off negative funding or sustained negative funding. So maybe it is, and most people don't want to think like this anyway because they want to be really precise, but maybe it is, between 30 and our accumulation range is between 30 and 45. And like, that's a pretty wide range, right? That between 30 and 45 is like There's like a 40%, 50% range, which wouldn't be really that abnormal if we were to consider a longer term accumulation like structure. I mean, if we were to go back to, and I haven't changed the screen yet, so you guys are looking at the right screen, but I'm just going back on my other screen to the accumulation range going back to 2018, 2019. And I mean, we're looking at from the lows to the highs around 35%. Now, volatility was a lot worse back then. So, praise whoever for the fact that we actually have some intraday movement, and candles are not just like open, close, same location, high, low, within $100. That was like a really painful period. Although if you think about it from a percentage standpoint, things are much different at lower prices anyway. So maybe not that extreme, although it just felt absolutely terrible. So it might be a reasonable area to expect the bottom. We're towards the lows of a range. You have a few details that are lining up, right? We have some presence on Bitfinex that is pretty significant. 4K BTC bidder, ETH buyer, 40K ETH. And just to go over this real quick, and then we'll get down to the chart. So that large buyer that's on Bitfinex, and yeah, Bitfinex is home of the whales, and you want to be the small fish that sort of follow along the whales, right, and get the scraps. And the ETH whale, if we were having a conversation yesterday, has an almost near perfect hit rate. Now this might just be a few instances, so it's not exactly a very large sample, but this is a multi-billionaire entity that is not price sensitive. So if they're getting involved right now, it doesn't mean price is going to turn right here. If they're getting involved right now, it doesn't mean that they don't expect price to move lower, right? So this is someone who probably has a lower time preference, meaning that they don't care what price is doing tomorrow or today. And they also are probably not price sensitive. So they're probably well prepared to buy lower, right? And that's why sort of certain whales and certain just very large participants, like just think about like Alameda, for example. That's why they can have actually such high hit rates, because they could essentially just martingale a losing position, and they have so much money, 3AC, right? 3AC might be a good example. They have so much money they can continue to just martingale and throw capital at a position until they're back on side, right? And then close that trade out in profit. So, it might mean that they sustain a much larger drawdown, which is not attractive, right? So if you're looking at like the risk profile of their trade, if they're only returning 10% on their capital after they've gone through a 15% drawdown to get back to that point, it doesn't look as attractive, and it certainly isn't something that your everyday trader should consistently lean on, right? So let's look at let's get into it now. So let me just go through the more recent comments. So I think it might be a reasonable area to expect a bottom to develop, like that we're closer to one. I just can't completely commit. All right. So again, Finex buyer, low time preference, meaning they don't really care about tomorrow or next week or probably the week after. And they probably are not price sensitive. So if we drop another $2,000, clearly the Finex buyers are scaled all the way down to I think 32. So that's well within reason. Bear with, yeah, it is better than Crab. Oxdon. So I guess he inspect elemented his page and left out a negative mark. I really like Cash. That's just my opinion. I really like Cash. I really like stablecoin margin contract futures. No, I don't combine all footprint charts. I don't think that's a good idea because, one, you just have different levels of volume done on different exchanges. So if I'm looking at, like, just to give an example, if I'm looking at Bybit, I know what stands out as an imbalance on Bybit without even using like an imbalance indicator. But if I was to combine like a Bybit footprint with a Binance footprint, I wouldn't be able to see that. It would be like lost in the noise because Binance has a ton of volume done. So I don't think of aggregated footprint as a really good idea, honestly. And you have different entities on different exchanges, and You have some entities that are hedging and some that are opening up new positions and new business, and those two things might involve different outcomes or different expectations. So I would want footprints to be as sort of granular as or atomized as possible. But I don't really lean on the footprint as much as probably a lot of people think. It's a memory of the tape. Like if I miss something, and I talk about on Bybit how there's particular activity I look for, and if I miss it on the tape, it's on the footprint. But it's not something that makes or breaks my setup. There are certainly cases where on the footprint, when certain conditions arrive or things happen, that it really does make for a strong setup, but it's not the end all be all. Understanding like supply and demand zones where market is developing value, I think that's more important. Okay. Yeah, averaging into a losing position is stupid. That's called martingaling. All right. Maybe Phemex buyers light and bloody, but okay. So yeah, actually, Bitcoin it was not moving with the S&P today as strongly as it has been the last few weeks, but it has been moving with European equities a little bit more. Obviously, a lot of the focus across seas right now, and the S&P being a, North American, United States focused market. All right. So anyway, yeah, it did break from that correlation temporarily, but I don't think that that's that meaningful. I mean, like I said, if the S&P picked up in momentum to the downside, like you would see that just Bitcoin would eventually follow. I think that that's the case. If the S&P moves sideways, it's one thing. If the S&P is moving down and Bitcoin isn't moving down, I think it's a matter of yet instead of if. Like, maybe that didn't sound right. I think it's just a matter of when, right? Like, it's not, oh, this is a new sign of strength and it's going to hold up. It's just, oh, no, it's probably still giving us time to take advantage of the correlation trade it's temporarily lagging. All right, so what are we looking at right here? Just real quick, just looking at the last 2 days. We'll just reset this really quickly. So we've gone from, consolidation at these highs. We had a significant, I went over this in a couple streams back, towards this rotation up compared to this rotation. So this right side, we had nearly equal and greater than open interest on some exchanges, right? So on this side, compared to this side, open interest had done this. So just a really high form of absorption, or rather high time frame look at absorption. Just the idea that you have a ton of participation coming in up there, more than the prior structure, but actually less to show for it. And a lot of that being on positive delta towards the end. So just longs kind of chomping at the bit, getting a little bit aggressive towards the high second time around. So impulse, market impulse is down, trending down, consolidation, impulse. A little bit of soak, looked decent, right? Market rotated back towards the underside of this structure. And then, so we'll just open this real quick so you just see how it transpired. And then yesterday's kind of, huge chop fest. So rotated, gave that retest, backside retest, broke down, right? A lot of this, again, very news driven, took out the lows. And, if you take out the lows after you're, currently breaking down, consolidating, it looks like you're trending. Anytime you have a structure that begins to take out the prior day's lows, especially one of this magnitude where we rolled over off of the high after rejecting at this local structure, a lot of the market is going to arrive to the conclusion that it's a breakout in progress, right? Or breakdown, right? So breakout to the downside. So it's easier for these locations to become traps. It's not often that you see in this market that we're getting a lot of and this just doesn't happen too often, period, where you return to a level from a distance, again, pretty impulsively, and it just continues down from there. Unless it's catalyst driven. Usually you see consolidation, chop, the level messes with your head a few times before ultimately choosing a direction, right? So if you're just looking at a structure like this, very rarely do you see that the market just continues to trend after taking out a high. What's it do? It usually traps traders and ranges, consolidates. Well, same thing can be said to the downside, right? So this was a very easy structure to come to that conclusion on, because you had this breakdown, right? Then you had the retest. So this looks kind of like very one and done, right? But instead, caught a bunch of activity down here. Had that pickup in open interest. So if you looked at, we'll look at it in a second. You could see it on, so the thing about Bitfinex, not Bitfinex, the thing about BitMEX and Binance, these are two exchanges that are, what I've noticed is they're pretty similar to each other in terms of their order flow. I've said forever, and I will say, I will go on record, I think that I might have been one of the first people to say this, and now it just seems like everyone has repeated it. It's got around enough. When BitMEX turned on their KYC, one thing I said was I think it's going to clean up the order flow, because we're going to take a lot of the sort of small trading retail out and only leave on sort of the serious trade. BitMEX is a great exchange, but we'll only have on it'll be a filter for a certain type of order flow, and it'll leave it cleaner. So I've noticed that BitMEX and Binance have been pretty close. So you might have participants on both exchanges that have their activity tethered, right? Whether it's algo driven or it's, market makers, but either way, you had the same structure into the low post break, right? Sort of, again, just very simple deduction that this would lead to a breakdown. You had a very sharp increase in open interest into this low on negative delta across both exchanges. Just a good trap setup, right? If this doesn't continue, and if you just looked at this, even if you're looking at just this DPO chart, nothing sexy, right? I mean, all you see is this is an area where you had a ton of participation into it. If you just were to trigger this off on its own, I mean, if you start trading back above where all that comes in, it only puts one side of the market in pain, right? At that point, it puts shorts in pain. So you had that squeeze, right? And instead, then market gets long, and we've just had this very choppy behavior. These 2 days, though, I think are significant, how we're unfolding right now, because you had this expansive day, so pretty wide range. It looks like it's going to lead to a new move down, and instead we have what is another, not a very balanced day. It's a normal distribution, but it didn't really lead to any kind of new price discovery downward, right? We only rotated below the lows. So if we just open this up, so expand clusters, here's your opening range, rotated below the lows, took out yesterday's stops, took out yesterday's lows, and then immediately started trading back within yesterday's range. Okay, so what this is telling me is that price is possibly going to build a range, right? We're looking at, so far, accepting inside of yesterday's value, right? But I think what we're looking at right here is more of a range that's going to form between 38 and like 36.5. So instead of retesting yesterday's value, right there, and then leading to continuation, it looks like we have a little bit of a double top in the low time frames. And more importantly, on this structure, we have, again, another pickup in open interest across exchanges that seems to be mostly driven by positive delta. So on this go around right here, it looks like buyers on derivatives specifically are a little bit more aggressive. So I doubt that they are going to be what helps push us or propel us back towards this 39 structure or that naked point of control. I would rather see, if this was acceptance into yesterday's value area, and again, it's a wide day, so it's not like the most balanced distribution where value is formed. If this was acceptance back within there, and we saw that most of this was, aggressive selling coming in, and, price is doing a good job of holding it, then I might be more inclined to assume that this might be a good retest for a move back through the prior day's value. But right now, again, it looks like across exchanges, this could be wrong, but it looks like so far the open interest right now is on behalf of aggressive buyers. So what I think is, and again, this is why I'm short, I think that what we ultimately get is something that rotates back down towards the midpoint of today, and then maybe develops a range within this daily profile. Does this make sense? So no expansion into yesterday's structure. Kind of weak around today's highs. Let me just pull the chat up. I mean, you can see right now. So here's a pretty good example. So here are the highs of today. Right, so we have a lower high. Okay. Sort of a rounding out structure. Momentum is drying up a little bit. If we look at open interest, it continues to rise up. So noticeably, it's rising up similar to the short setup that I had on Binance earlier today, where I shared we had a little consolidation. Price was consolidating. And meanwhile, Binance's open interest was just kind of ripping through, not ripping through the roof, but it went up 1,400 BTC in a small range where price didn't do anything on positive delta. So my assumption was that most of that was due to aggressive buying activity. So you have probably both sides doing battle over here from an aggressive standpoint, but either way, right? This participation up here is leading to new contracts being opened, new business being done, and there's really no follow through by buyers yet. So I think we're looking at another maybe possible rollover, where again we'll see something along the lines of what we had earlier from Binance. Let me just look at the chat again. So price ladder, I just use the exchange that I trade off of, and the price ladder I wouldn't say is that important for analysis. It's just, it depends on what, you could use it on any exchange. Oh, I switched this around because I was trading, I don't know if I mentioned this, but I've switched over to trading USDT margin contracts, and it's just a matter of where I trade. So I want to pay attention to the order flow on all exchanges, but if we're talking about where I'm specifically getting involved, I need to look at the actual chart for that exchange. I've mentioned many times before, I trade on multiple exchanges, and Bybit is where I do primarily do most of my Bitcoin trading. Although I mentioned this morning how, and I just noticed this recently, Phemex, we have a link below for it, is actually doing more volume. But I noticed, I shared that, and it was coin margin contracts, and Bybit is actually higher on stablecoin margin contracts, which are what I want to trade right now because I don't want underlying exposure when I'm not in a position. So, and a lot of the money right now is, a lot of the market right now is favoring stablecoin margin contracts. But just as a heads up, whoever asked that question, who was it? Carlos, I pay attention to all the exchanges that lead by volume and open interest to look for specific setups unfolding. And a lot of those involve like crowding in one particular pocket, whether it's, the market shorting into the hole like we saw on Binance, or whether it's a market, getting too aggressive at highs leading to nothing. There are examples where this happens or stands out on one exchange more than the other, and it's important to sort of have an eye on the leading exchanges for this reason. How long have I been trading for? I've been trading for 15 years now. I'm pretty old. So anyway, let's go to a traditional chart. So what I think ultimately is going to happen is we're losing momentum up here right now. I'm looking at a possible range forming in this region, right? I mean, if you look at the structure right now, we'll go to a candlestick chart in a second. If this is the end of a trend, it's going to end on, it's not going to be reversal off of this, right? So I doubt we're looking at something that continues up from here. So at most, if this doesn't work out, so if this short doesn't roll over, we're probably just going to be building a wider range, but it's still within, I think it still gets capped out around that 39 region. So either it's a composite between the last 2 days, or we form a composite towards the low end of the structure, and then we have, you know, a range that might possibly be distributed between these two structures where the overlap is, the overlap of ranges is most obvious. So it's not like you have perfect value overlap. You do, but it's not the kind of value overlap you would see in a, you know, consolidation. The kind of value overlap you get is a lot more obvious. It's more than 50%, right? So value, value. This is value, and then only this much inside of the prior day's value. But you're looking at an expansive day down that didn't result in continuation, and instead is, you know, we're mostly back within yesterday's structure. So we just took yesterday's lows, but we've been spending a majority of our time within the structure, and it wasn't a balanced structure at all. So pretty inefficient move down. Wouldn't be surprised if we ended up moving up towards this high. If anything, the place to look for that change possibly occurring would be right around here. So it would be obvious that my idea is wrong if we're able to find support above today's point of control, right? It's a day in progress, but also within yesterday's value area. Even though, again, this structure, it would be a structure worth taking more seriously from a, you know, value area low, value area high standpoint if it was very balanced. Meanwhile, this is sort of spread out, so it's not like we had much structure established within. We covered from one point to the next and back, right? This wasn't a trend down like this. This was, what do we do? This, and then this, and then this. So we didn't really establish anything within there. So it would be easy to cover this, but again, it looks like we're having a little bit of trouble right at these highs. Honestly, if we started approaching these highs again, I wouldn't even bother letting myself get stopped out. I probably would just close this, because the chances are, if we're continuing to push up instead of rolling over after this, if you consider that the open interest is going up within the structure, right, that's just risk. If we just kind of boxed out this region and you add a series of in the making, like let's say price is now favoring the highs again, you have a series of higher lows forming, relatively equal highs on the day, right, on the low time frames. A push up again would probably lead to a decent spike that might carry through the structure because there wasn't much stepping in the way, right? So if we start approaching the highs again, then I probably just cut the trade. And I'm talking about just the highs of today. Because then maybe we're looking at something that forms a range over time within the structure, right? And it is a larger structure. Make sense? Let me just give you guys a second to catch up, and then we'll go to a trading view chart, take a look at a few other details. I haven't traded equity futures in a while. I'm opening up a new account actually. But I mean, the best software is probably Trading Technologies, but the last time I used it, it was like $700 a month. And then probably Jigsaw and Sierra Charts, CQG. But you could trade the smaller platforms too that have ladders, and like TradeStation and a couple other like whitelisted white label brokers, or brokers that white label products. I think that's what it's called, right? Like what's it called? Certain futures brokerages, they'll like take Quant Tower and make their own version of it. No, that's not. These are not inside bar candles. What keeps you at the screen every day? I mean, this is always what I've done. It's basically a job. So, what would be the best tool out of your kit? Best understand the bottom of the range will hold. I mean, the best thing would be confluence of sorts, right? So seeing that selling is coming in and it's being absorbed. So if you get selling at the low, negative delta, if you have some type of CVD divergence, heat map reinforcement is always good, but it's an advertisement. If you have the confluence and the orders have been there for a long time and they're not changing, not moving, then sure, but it's not something I'd really focus on too much. Whether or not it would hold, I mean, some of the best ways to identify absorption are just using like a CVD, and that's a pretty good indication. But yeah, let's look at the other chart. I mean, at the highs and lows of a range, you're looking for either acceptance or absorption, and so I'll just go over like CVD really quickly. Let me switch the chart. Between TPO session, volume profile, footprint chart. I mean, they're just tools. Like TPO is just organizing data, so it's very useful for an intraday trader. Footprint charts are great, but I mean, I'd say like most people should probably study price action before anything, and how price behaves around important levels. And you could derive some pretty key levels off of TPO. You could also derive key levels off of imbalances within footprints and high volume pockets. All right, so let me just switch the screen. Otherwise, I'm just gonna constantly go through questions and not do anything. All right, so real quick, just in terms of like range high and range low. So let me use a better. Let's use Trading Views native. No, because then it'll take off those tools. So I'll use this. So range high, range low, right? So one of the first signs of a range forming is, maybe you have multiple periods of consolidation leading to trend day type TPO, and then you have the beginnings of a balanced structure forming, and you have value overlap. So a high is put in, maybe a low is put in, but then price is finding fair value, and it's a relatively even sort of consolidated distribution. Highs and lows holding, first of all, like first visits back to highs or lows are more than likely not going to lead to continuation or breakdown, right? So, let's say you have a trend type day, balanced day, and you have one high put in. Very rare case that you're going to see the market just move through this high and continue up from there. Very rare case you're going to see the market just roll from those lows, right? So more often than not, you're going to get traders trapped through both of those zones. I like to use CVD over a range, right? So not just like on the low time frames, but also over, the intraday, maybe a couple days, not on the very high time frames. So I'm not looking at a CVD on like a daily chart, but you would look for signs of absorption or signs of exhaustion, or signs of acceptance, which are, obviously a little bit more nuanced. You can look at a footprint and see that a little bit easier. But if you're looking at a high and a low, right, and this is let's say that this is your price within the structure. So high, low, and now making an effort towards the high again. Absorption would be, let's say that, let me draw this tighter because I can see that your screen is actually, well, what I'll do is I'll do it on this. Here we go. So here's your price. Here's your CVD. I'm just boxing it out to help with perspective. Price. This type of CVD, so let's say we're rolling here. CVD where you're making a new high, but price is not making a higher high. That is a sign of absorption. Okay, so in this case, you had more buying on the right side of the structure, but price was not able to make a new high. So what it means is liquidity over here on the right side was much thicker, and therefore there was more friction. The heavier hand was in the limit order above, right? Passive sellers, market makers, et cetera, et cetera. So that is a pretty good sign. So especially when you see that on this new high in buying, that there's an increase in open interest, right? New contracts coming up into this level. But again, more importantly, price is not breaking anything. So that's absorption. The opposite would be at the low, right? Where, let's say price is rolling back down towards the low, it holds, but now your CVD is down here somewhere. So this is an indication that someone is absorbing more buying activity, right? That's absorption at both sides. It's a pretty good signal. Confluence with any kind of positive activity and price action. If you look at market depth, maybe it's stacking up. Like I said, wouldn't really put too much, pay too much attention to heat maps. The high holding and the low holding can also occur from exhaustion, right? So let's say that price is forming a range, and now on our second go up, we have a CVD that, and again, this maybe is starting to round off, so you're looking at the possibilities of rejection, right? You're looking at signs in price action that it's beginning to reject. Maybe your CVD is not even half. Maybe it's like something like this. So what this is saying is that on this go around, there's actually less buying interest towards these highs. Now, it's nuanced because, you could make a case for the fact that if there's less buying over here, but price still got up here, maybe the bid is following along stronger. Maybe the ask is being pulled and you don't need as much volume to take the move up and you don't need as much aggressive buying. But for most purposes, when you have less buying towards a level, right, or the opposite, if price is ranging and on a return back towards a low, you see that there's just less interest in selling, right? So price is like back down here towards these lows, but in making a new low, right, before it even breaks this low, you could already see that sellers are not as interested. That's a pretty good sign of exhaustion, right? Or just lack of interest, right? Lack of interest on the second go around towards the highs, or lack of interest selling towards the lows. So there's a bunch of things you could do. These are just a couple examples. Price action is very important. Paying attention to order flow is, one thing. I like to look at the footprint for signs of this as well, right? When you see a ton of selling come in, but you could see the same thing on the tape. You can see the same thing on CVD, just in different forms. Let me just go through and then go back to the. So CVD starting to look positive is a good sign, right? It just means that there's more buying coming in. So we've seen that like Binance has been a buyer. I think FTX has been a buyer the last day and a half. But CVD can be positive because of shorts closing, right? And you have a thin book. So, I would want to see that sustained. And that alone isn't enough on its own. You need to see that, again, just price is able to trade above pockets where it was struggling prior. Pockets where activity came in and there was a fight that took place, retrading above levels where it lost, signs in price action, right, to confirm this. Now there's a ton of nuance, right? You might have, at some point you start to pick up on the fact that, they're beginning to lift the offer a little bit more. Sellers are not as interested in selling a level down. So for like a footprint trader, you might see it as a completed auction, where if we're looking at a footprint and like, let me just switch the screen real quick. So we'll expand this. How do I expand this? I think it's right here. So this right here is not a good sign, but if it was at a high, it would be. So here's an example, but it's not the best. Price rolled over from here. It rolled over like 200 points. So 200 points, yeah, around 250 points. If we look at like a range like this, right, and consider this as just a two-way auction, right? This just goes into auction market theory. As price goes up, you're gonna reach a point where no longer are buyers interested in buying, right? If prices, in the process of finding fair value, you're going to be finding points within structure where buyers are no longer interested in buying and sellers are no longer interested in selling. So a completed auction is when, you're moving up towards a high. Let's just use this for example. And you notice that buying interest dries up passively. So as the market is moving up, this zero up here, that means that the auction is completed. And what that says is that no longer did you have the bid willing to track this up, right? So it never went bid. The last place that the bid followed up was this 23.3 around 38.50. And what that means is just your passive buyer is no longer willing to buy. And the same thing can be said for the lows, like towards the low end of a range. There's many times where you'll see it capped off where you'll have zero prints at the lows, right? In stop runs, this happens a lot too. But what this says is as we move down, we got to a point where sellers are no longer willing to passively sell these levels. Okay. So real quick, just looking at this over the last few months, because this is also showing, it's a high time frame look, but from November on, we haven't been able to hold any levels, right? So we had off of the high, breakdown, one-sided month. So let me pull this within view. Right? Again, another sort of one-sided month, the month of December. So just looking at value, we never had any value overlap, right? Another one-sided month, the month of January. So these are monthly TPOs. This is the first time that we have monthly overlap. So what you notice is each individual TPO, each monthly profile started and ended at lower prices. So sellers were clearly in control in this on the higher time frame. This is the first time where you have meaningful value overlap, and we're already towards the later stages of the month. So again, this is just it's a very late signal at this point, but it's a high time frame indication that maybe we have what can be leaned on as a possible range low forming or accumulation zone forming within these structures. And again, I said earlier, I was like, that sounded really smart. I was like, I said between 30 and 45, it's possible we do develop. When I asked earlier, do you think we're closer to low, closer to the high, or the end of the beginning? It's possible that we do have a really wide range at the lows, right? If they are the lows, right? Because we had one in 2018, 2019, it's 35% from high to low, and this is around 40. So, I mean, hopefully we get ranges like that, because that implies there's plenty of meat on the bone. But this is the first signs that things are slowing down, right? At least, from a monthly standpoint, we could say that, momentum has been, we've come into the other side of the market, right? It's no longer just sort of one time framing on the monthly downward. And this wasn't one time framing, but the idea is we've come into something that is able to offer a significant kickback. I don't want to get too far into this way of thinking, but if you look at this kind of naked, you could sort of just see it in the response of prices, how it's expanding now. So this consolidation, it's almost like if you look at consolidation, this hiccup, roll down, consolidation, right? Larger hiccup this time, took out these highs. This one is, I mean, the transition, I think it's not woo-woo to start talking like, I mean, fractal talking, kind of looking at for these things, it's really easy to see patterns where they don't exist. But you see how this changes over time, right? So from the breakdown, consolidation, attempt to throw back, but don't even take out those highs, large breakdown, right? Consolidation, larger throwback, not as impulsive as a breakdown. So you're starting to come into something over here around 45. And now brings us to where we currently are. Final sort of, this is a more capitulatory spike, a much more obvious presence now by buyers, right? It's kind of like breakdown, throw back, breakdown, consolidation, throw back, breakdown. Now you have possibly a much larger consolidation, much larger throwback forming. It's at least showing you that we're coming into an area of demand, right? You know, very clearly no demand up here, increasing demand, much more dispersion, and therefore I would say that this is a much more indication, you know, a clearer indication of demand, and even better, it's like at these lows we finally had offside positioning down here right into that non-farm payroll move off of the low. So you're starting to see the signs of maybe a bottom forming in the near term. But again, if we look at the weekly structure, I mean, first of all, the monthly, we have 6 days left in it. This was an incrementally higher highs, incrementally low, you know, higher low right now. I wouldn't really focus too much on the monthly, you know, unless we're near or around the level come the time of close. Looking at the weekly right now, this 31,778 level is really important. That's the lowest weekly close of this year. So, you know, that's kind of an oh fuck zone. So I really want to know right now just kind of where the immediate oh fuck zones are, because that's an area where I think you could punish the most amount of people. So right now this low has been front ran, but in bullish conditions I would expect something like this to hold. But it's kind of like, it reminds me of this right here, where you ran into that level sort of full steam. It was front ran, caught traders offside, shorting the breakdown before it came. And then you get some type of possible throwback, and then we end up taking that low. Now, in this case, that occurred and led to a larger breakdown. I'm not ruling that out whatsoever, so I'm not like leaning on this low holding. The next couple of days, I'm looking for a structure to form within here because there's some signs of that, but like there's no way I'm gonna just buy this and walk away. I always talk about things like this. I just paper hand. Like if we run this low, show signs of strength through the low and show signs of crowding, then yeah, I'll probably get long. But if we start to accept below 36,224, 244, you know, just that daily pivot right here, I don't think it makes sense to hold out for hope. Right? If we start falling below this level and accepting, there's nothing really here. We haven't had anything there we haven't had any structure formed within there going back to, you know, July of last year. And that wasn't a really substantial structure to begin with. That was a one-sided move off of the lows. So the idea is this market was rejected out of here very quickly last time, going on to January. So if we accept into that region again, it's just more than likely that we go lower. And lower just means, you know, down here. So right here is actually, right now, let me just change I'm changing around my other screen. Hold on, how do I make this tinier? There we go. So we still have, it looks like, Binance is not, there's not really a strong case for it on Binance right now. Open interest, if anything, is down from these highs. This one was really obvious, so this was a really good short opportunity. So in this structure, this is what I was talking about. You have a spike up into a pretty fortified region that had been fortified, specifically this region right here, 38.5. So spike up, followed by consolidation, and that consolidation on its own, that could always be a flag leading to further upside. But in that structure, so from, you know, a range of 37.8, looking at a 1% range, and you had, hold on, let's go back. Right here, you had like a 1.3% increase in open interest. I mean, the dollar value in this structure alone, there was like, I think 1,400 BTC committed that didn't move the market at all. So you're looking at open interest go up. This is mostly driven on positive delta. And again, all that activity coming in at these highs, once you start trading below lows, it's very easy for that to start unwinding, and we start to see that unwind happen pretty quickly. That was a really good short opportunity based on that crowding. Right now it looks like BitMEX is still sort of leading from a derivative standpoint with aggression towards the highs, but Binance is pulling off a little bit. So this is something that, like I said, a short that I would just cut if we start approaching the highs around 38.2 again. Just because at that point you're probably squeezing up to yesterday's highs, or to the highs of probably to 39.2, the point of control from yesterday. But right now, I mean, this region stands out. Sort of equal lows right here, which makes me think even if you squeezed up here, at some point, like if this was a bottom forming, I don't even want to like start talking about it, but you'd still more than likely revisit these lows. So the closer you got to this structure from a contextual risk reward standpoint, it would more than likely, I mean, if you, let's say you came into this level vertically, had an exhaustive move, and then started to roll under again, you're probably looking at a pretty well-defined short position, because just again, from a contextual risk reward standpoint, you have a nice bounce off of the lows. You have this 40K handle, and again, it's more than likely price takes time before, rather than just V-reversaling up from there. But I don't know if there's necessarily an indication that everybody's short. One thing though, I mean, like I said, if you look at CVD on like Binance, they're a buyer. Bitfinex is a buyer. But it's reasonable to expect that if whales are, making a bottom, so to speak, that it would not be within like a $500 window, right? Price would still have a pretty decent range that it would work within, and they would just be buying within that structure. I think if you took out this low and then trade it back with, I think if you take out this low, I think there's a good chance that you get a lot of participation through that level, and you might get a decent squeeze off of that. Right? If price is able to break down through this low, reclaim it, we see a lot of activity come into that low, then you have, maybe the possibility of a structure that looks a little bit more like a 3-drive structure, a little messy over here, but still, the market sees us trading back within one of those lows, and then you get a very swift move back up there. And again, even just like locally, it's not like this is substantial. It's not like we have, huge resistance above us compared to looking at this on the daily when you came into a very important level. So this was clearly a area you would mark out as a very significant supply zone. If you just consider that this looked like a possible bottom to many, people were pretty vocal about that. Some pretty significant players were vocal about this being the bottom. Now, I wouldn't assume it for them, but you can imagine that there might have been a lot of people that were longing off of the structure and upon breaking down, looking at this level to get even. So just chances are when you have a big liquidation structure like this on derivatives, that there's going to be some spot supply on the return, because people are going to be just happy to get out around their breakdown point. So especially when you have, you know, a level that was, and I didn't even mean to draw that. That was kind of random. I didn't mean to isolate the middle or the highs or lows. You know, this is from December to the end of 2022, first week of January. It's pretty significant structure, right? It's robust compared to, you know, this, or how we are distributed within the structure. A lot of back and forth here. You know, that's a pretty nice block of price. Any questions, guys? And just to make everyone aware of what I'm talking about with Bitfinex, this is your buyer on Bitfinex right here. So that's about 4K BTC. It's new, right? But again, it goes all the way down to 33. So it doesn't have to mean anything for tomorrow or today. And it could be complete bullshit to begin with, right? Although it looks like it's been tapped to a degree, slightly. Yeah, this first tranche of it up here. Lower time frame is better to chart perps or spot. I mean, it's a derivative driven market. There are times when you want to look for spot strength, but crypto as a whole should be understood as a derivative driven market, right? They definitely drive lower time frame price action. And the highs and lows of this market are created because of crowding in both directions on derivatives, not spot. So I always chart perps. I mean, right now we're looking at just a Binance chart, just because I had this randomly selected. But most of the time, I'm going to be looking at either, you know, the Bybit perp chart, because I'll be trading that. Because from each exchange to the next, you know, it's tough because there's multiple exchanges. Bitcoin is Bitcoin, but it trades like different products across all these exchanges. It's attempted to keep in line, but it's not perfectly in line. So you have exchanges that have more price action or more of a wick than others. So I mean, in that case, I honestly think that it's just important to understand you should be charting perps over spot, looking at a perp exchange over a spot one. And I guess it's the best thing to do is look at the leading perp exchange from open interest and from volume, or at least one of them, right? The top three. In most cases, a bottom needs to absorb the wicks. I mean, wick is kind of, you know, wick is showing you sort of the same thing that, like a lower time frame one, especially because it just involves less time at the area. But a wick is just the idea that, you know, the market wasn't able to spend much time down there. So a bottom should occur. Yeah, you would want to see, you know, in a bottom that we have significant wicks. You know, this, but you don't have too much down there, although that's, again, this is on a price, from a price standpoint, those are pretty big. So yeah, you want to see significant wicks. I mean, this so far is just one area of major wicks. If you look back here, it took a while. So again, I think it's safe to assume that there's more likely more downside in the future. Just for my concern, since it's so news flow driven, I'm really only focused on the next day. I don't really want to start thinking too far out because we're going to get there, when we get there, if we get there, and I'm going to be watching the market on the low time frames anyway, and still sort of interpreting what I see the same regardless. So I'm not really trying to predict, but you would want to see, yeah, again, if if you just think about this region as a region that was not accommodative of price and letting us stay there for long, again because of demand. If you return back to that level, you want to see that if there's a whale down here or whales or larger participants, you want to see that they treat the opportunity the same, right? That there's a very hasty sort of aggressive buying activity, because if you lower the prices, it should be seen as sort of like something. If something has value and you lower the prices, you shouldn't see that it's that a large quantity still spends a long amount of time at lower prices, right? Like if you discounted a Ferrari, Ferrari makes 1,000 cars a year. I don't even know if that's true. And if they made 1,000 cars this year, and they were like, "Hey guys, tomorrow Ferraris are on sale for $1,000," like that Ferrari chart would have just one whole wick, right? You would not see that it didn't. You would see that it didn't take more than a split second for those to be bought. And this day and age, probably some 15-year-old kid who used a bot that he was using to buy sneakers online on one of those sneaker websites. I think you get the joke, but yeah, the wicks kind of show the same, right? Should show, but it's not on its own. It's kind of tricky because a candle is just 4 data points. So this daily candle here, for example, it closed all the way back up there, right? So it means that it did get back up here and reject these lower prices, right? It ended up closing back up here, but it could have spent most of the time in the day down here, right? You understand what I'm saying? Like, we could have very well, for this daily candle, made this low very fast. Price could have been hanging out down here the entire time, and then because it closed back up here, you have a wick. So I think it's important to look at price on the low time frames, because then you get a really honest indication. Where was that again? Well, I forgot what part of the chart we were looking at. Of demand, right? Because you'll see even on the low time frames, price wasn't able to spend time down there. I mean, so, like that. This is why I like to look at charts that are not time based. But Esteban, I use market orders for 90% of my entries. And I try to use limit orders to get out, but I'll deviate from that if it's required. It's just what I try to do, but it doesn't always work out that way. For swings, I chase and fill with limits. Most of the times, I'm still, even if I'm swinging a position, I'm going to tag on some at market just to put a position on, just to get you in line with it and give you sort of a feel. Until you have a position on, you really can't tell how you feel. So, also, until you put a position on, you really can't tell how it's trading, because by putting on a position, you see how the market responds. And this is not for everybody, but when you're trading a little bit bigger size, you start to notice, you learn a lot more about the market when you start trading larger size, because you see that you change the market by entering the market, right? The market isn't just this static thing. By your very presence in the market is changing the market completely. So I guess like one of the best things you could probably do, and this is not a good idea, but if you just had money that you were like, I'm just going to piss this off, and what's the best way I could waste it? It might be to like trade a thin alt with money that is too big for it. Like, this is just a poor example, but if you look at daily trading volume, that's a pretty good representation of a max. So if you see that like the daily trading volume for today is like 1 million contracts, well, you're not going to be able to do anything with 10 million, right? So if you find a thin alt, really thin alt, and you have like just maybe even a couple $1,000 will do it, you'll see that you'll change the alt by trading it, right? Market makers will respond to you depending on the alt, because you might not even have much. Well, it might just be market makers. But you'll see how you change market by trading. So you have to, I mean, for me, I always have to put on a position just to anchor something. If I swing multi-day, yeah, I move stops. I usually put them outside of a low based on some multiple of ATR, based on some, measure of volatility. Not usually just structurally, because, usually you'll see that get hung. If it's a strong trend, like I'm not just putting it at structure. If price is like, if we're looking at, multi-day trend and we're all the way up here, I'll probably just lock in a trailing stop that ticks up with price based on a percentage distance. Because, you have to, like, I couldn't just be entered from here, see a couple days later we're all the way up here, and think that this is still the same trade as it is down here. And again, like, one of the better measures is, imagine someone, let's say that this is your entry and this is your target. And now imagine someone turned off your computer and exited your position right here. And you, like, let's say you longed 1 million contracts. So you got all of that. You already have, your P&L is, you have not realized that yet. But let's say someone closed that position out. Would you get in that position again for this? Right? No. Because, at that point, this is your reward. And this is your risk. Right? If like the next, it might be you'd say your risk is to the next, consolidation zone, but still you're much closer to your target. So you have to think of it dynamically. That's why I say things like, if we're approaching, when we were approaching the all-time highs again, I kept saying we're coming back to a level that contextually is better for shorting than it is longing. But no one wants to hear that, because they want to think that, oh, if you break this, it's just going to mean you moon up. Like, why don't you think like that? And from a trade definition standpoint, we're much closer to something that's probably going to reject us the first time. So it's much easier to find risk on this trade because we're closer. And it's much more likely that, like, let's say on the way up, you had structure like this. It's much more likely that this is an attractive short setup, just from a contextual risk reward standpoint, because this is your target, this is your stop, and this is your entry. This is, that pebble is much bigger than that one. I don't know why I went with that analogy, but I think you get the point, right? So 1x is like not necessarily short because you don't have any extra exposure, but you are long USD, short the asset, right? But it's not like a short where you're increasing your exposure and you're going to gain anything. You're just going to gain BTC. What happened? Hold on. There we go. So, yeah, so I on the other screen, I've actually cut my short. So, not paying attention to anything, stop, be right above 38.4 until we started to roll. At that point, I would just, this wouldn't be something I'd probably just set and forget. But at this point, we're, like I said earlier, if we start tracking back towards the highs, I'm not going to leave this on. So as you're sort of funneling up towards this high, it just becomes, it's possible at that point we just squeeze further up. If I got stopped out, right, I just left this on, mechanically and wanted to get stopped out. Chances are, like, I get stopped here, but, I get filled between here. This might become more attractive if we start to move sideways and then lose, like, what progress has been made up between that. But there's just a risk right now that we squeeze up a little bit higher. I mean, just to go back to what I'm looking at. Yesterday's day was not really any thick area within yesterday's day. Again, you see the underlying activity. So it's not like there's much in the way. And the idea of the short was this losing momentum and rolling instead of accepting back within prior value. And instead, the more this is bid up now, the more likely this could be played as acceptance for a long up to these highs. So I might actually get long here instead of short. Yeah, what the hell. We start squeezing up towards 38.2, I'll probably just tag on, because at that point we have probably, you're looking at covering this region if we squeeze up. There's not a whole lot like in the way right now, just locally, you know, this little pocket. Any questions, guys? Might wrap it up soon. I mean, there's a decent amount of buying in the last 15 minutes on spot. You have 122 million versus 69 million. So maybe we just get a poke up. Maybe it's up to like 38, 38, right around here, 38, 850 region. Just to cover enough of this, grab these highs, and then we'll see. Probably gonna wrap it up though, guys. It's not like, this go around, Binance looks a little tamer. So versus earlier, my point is, I'm so zoomed out. There we go. So just looking at open interest, this was that first roll. So this might be a little bit more spot movement, if anything. Decent premium on Phemex right now, and Phemex is buying, and Binance is definitely buying, and yeah, so I'm getting long. What the hell? Stop loss right below 37.8. Excuse me, 37.73. Hold on one sec. Cool. Let's see if we can push. It's worth taking a swing at. All right, that'll be it. So either I hit high 38s or get stopped out, unless something happens in the interim that is worth yanking the position over. But I can't really see, check the fake real order. I'm using Quant Tower. I don't really like to talk about Quant Tower too much because I wrote a scathing, I don't like to share their product too much because I wrote a scathing review of them when they caused me to long 13 million contracts that I didn't want to long, and then said it was because of hotkeys. But yeah, I'm using Quant Tower right now. So I could actually show you the order, but let me just hold on. Let me hide my. Where is one sec? I could take away the account thing and then slide this into the window. Account lookup. There we go. So I am trading right now. I'm trading what's it called? USDT margin. Let me just make sure that this doesn't come in the screen, but you'll see the entry. Okay, I think I'm sliding it over. Is anything showing that might be incriminating? And is it in? It's in, and it is in. There's this position. So that is the trade. Let's see. So you can see, like, on this, I have a couple other templates set up top. This is not the ladder, but I have different chart templates just to switch over between tick setting and time setting. But yeah, there it is. And some people get confused when I share screenshots. This number right here, that's not the position size. That's just the changing P&L. And it's a bunch of like really long digits. So it's not you know, it's normal. It's not the normal sort of 2 decimal places. It's 1, 2, 3, 4, 5, 6, 7, 8, 9. So if I share a screenshot and it's cropped, people think I'm shorting, you know, intraday, like 50 million contracts of BTC between, you know, 3 and 500 point moves. And it's like, nah. So yeah, no LARPing here. Taking plenty of trades on stream. Last question. Do you still hold spot? I have, so just to be as clear as possible, when I say flat, it means that I'm flat across all exchanges. So any spot I have on exchanges, any derivatives I have, like just to, because sometimes like I think that it's probably, I mean, not everyone gets to hear this because they're not on my streams. But if I say flat, hey, does that mean you're flat, you know, futures? Does that mean you're flat spot? Does it mean you're flat both? I try to be as clear as possible because there's definitely times where I might just be flat futures and have spot exposure. Right now, I don't have any spot exposure on exchanges. The only futures exposure that I have right now is currently this long that is coming back against me right now. But I do have cold storage. So I think I've made that clear in the past, having cold storage always. Just because I do believe in the long term that Bitcoin goes up significantly. But an investment time horizon is like 2 years plus for me. So I always have had cold storage, and I've always had a significant amount of cold storage. But when I say I'm getting flat, that's all spot exchanges. That's all futures positions. Because again, I do have significant exposure across multiple exchanges. But I've also been in this market for a really long time. So, all right, guys, I think that covers it though. The only time that I sold a significant amount of like cold storage spot was pre-breakdown when I was past short-term capital gain status with a fair amount. So I figured, what the hell, lock in some BTC around 50. That'll be it, guys. I'm getting out. Have a great night.